people who have high levels of income, they can cover up really bad investment decisions because they have a wall of cash flow coming in. So it doesn't really matter if you're not a great investor. So people generally with higher incomes really make really dumb decisions for the most part. There obviously are exceptions to that rule, but it's pretty interesting. The key is just survival. What they don't understand is they have too high of expectations right away. They think, I'm going to start some business, I'm going to instantly be a millionaire, be super famous, everybody's going to use my product or service. It just doesn't work like that. You just got to get it out there. You got to hone your ideas, keep trying. If you can just stay alive after 2 or 3 years, that's a huge victory. And then at that point, you can start kind of honing in things, start figuring out how to become more profitable, all that kind of jazz. In the ear of anybody, higher up in the U.S. government or the Federal Reserve or the Treasury, I would say, start mining Bitcoin, buy Bitcoin, get on it. The first country to do this is going to be the most powerful country, the most pertinent country in the future. Else.
Hey everyone, thanks for watching this episode. If you enjoyed this episode, make sure you like and comment below. And to find future episodes in your feed and push notifications, make sure you subscribe. And if you click the little bell, you'll get every new episode as it's released. Thanks again for watching. Today, I'm sitting down with Dr. Jeff Ross, who is a retired radiologist, hedge fund manager, and a Bitcoiner. Jeff is the founder and the managing director of Vailshire Capital Management, LLC and Vailshire Partners, LP, which has over $40 million in assets under management with a 40% CAGR over the last several years, which has crushed the S&P 500 returns. Prior to Vailshire, Dr. Ross was a fellowship-trained interventional radiologist and a board-certified diagnostic radiologist. Dr. Ross has also been a contributor for the Motley and an occasional contributor for Seeking Alpha. In today's discussion, we discuss Dr. Ross's early years, his medical background, what led him to becoming a hedge fund manager, his Bitcoin origin story, as well as the current state of Bitcoin, where he sees the Bitcoin price going over the short term, the midterm, and the long term, and much, much more. So with that said, let's dive in with the one and only Dr. Jeff Ross. Hey guys, I'm going to take a quick pause to introduce the first sponsor on the Jay Gould Show. I am happy and proud to say that this show is now sponsored by Withum Smith & Brown, which is a forward-thinking, technology-driven advisory and accounting firm that is committed to helping big and small companies be more profitable, efficient, and productive in today's complex business environment. Withum now also has a dedicated crypto and blockchain technology team to help early-stage businesses properly navigate all the crypto tax-related matters. I've been using Withum both personally and professionally for nearly a decade for all of my businesses' personal needs as well. I'm very happy with them and I highly recommend Withum. You can contact Withum by visiting their website at withum.com. Now back to the show. Jeff, welcome to the show.
Thanks, Jay. Thanks for having me.
Thanks for coming on. We met months and months, maybe a year ago, I guess, and we've talked here and there on Clubhouse and Twitter Spaces. I've really enjoyed the conversation, commentary that you have, and your perspective. So I wanted to bring you on the show. You seem to be real bearish right now in the short term, catching a little heat from some of the maximalists out there. But you know what? Let's go through your background. Before we do that, the first question I ask everybody on the show, tell me who your top 5 are.
Top 5, so kind of business-related top 5 people. What's funny about it, I was thinking that it's mostly social media-based, right? I mean, so much of my life is just sitting in front of the computer, and so I spend a lot of time on Twitter Spaces and Clubhouse. The people that I like to banter with the most and generate ideas from, I would say Preston Pish has got to be one of them. I like the crew on Clubhouse Spaces that would include American HODL and British HODL. I like their kind of macro views and Bitcoin views. Joe Carlasari as well, the attorney. He and I have kind of done a lot of back and forth recently. He's bullish currently. I'm bearish currently. So fun conversations. James Lavish and Mike Alfred are both kind of guys who are big in the macro space, but they invest outside of just Bitcoin. And so I like talking equities and other kind of things with them as well. And then I really like talking anytime with the people at Swan. I love the Cafe Bitcoin, and Corey Clipson is awesome. Alex Stanzik, who runs Cafe Bitcoin over on Twitter Spaces. He's just got a great heart, and they all just love to teach. They love to educate. And so, yeah, all those guys.
I love it. So you're like mostly Bitcoin, basically. So you're surrounding yourself with Bitcoin.
Bitcoin and macro, I would say.
Yeah, that's the Preston crowd. And Yeah, I kind of fall into that crowd as well with him. And that's why I kind of have an affinity towards listening to things you have to say as well. Your background's really, really interesting, right? You started off in medicine and then moved into money management. Why don't you walk us through early years before we get to that? Like where you grow up? Tell us like your kind of socioeconomic conditions growing up. What did your parents do for a living, siblings? Give us a little background about Jeff as a kid.
Sure. So great question. So I basically am a Midwest kid. We grew up. I have two older brothers. We were all born in different states. The three of us were, because my dad he worked at a department store in the Midwest called Herberger's, which most people haven't heard of, but it's kind of like maybe Macy's as a comparable kind of store, but Midwest focused. So he got moved around as he kept getting promotions to different states. So I was born in South Dakota, lived in Billings, Montana, moved to Minnesota, basically grew up in St. Cloud, Minnesota, central Minnesota, went to college at a small school in Minnesota called Gustavus Adolphus, and then I went to medical school at the University of Minnesota. So used to moving around in that area, but anytime we ever had a chance to go on vacations, we always went west to the Rockies. So I always loved to go to Glacier in Montana or the Rockies in Colorado. So moving ahead a little bit, when I finally had the opportunity, I was free of all my medical training. The first thing we did is we moved straight to Colorado Springs, which is where we've been since 2008. Love it here. It's just, especially if you're from one of the colder northern states, it's just like paradise here. It's the weather, the sun comes out, it's like 300 days of sunshine. I look at Pikes Peak right out my window from my office. It's just the most beautiful place in the world.
What kind of grades did you have as like elementary school and high school? Like, what you were always an A student?
Yeah, I was one of those kids that I just wasn't really interested in school until I got to college. I still got A's.
Yep.
Yeah. So not very interested in it though until I could finally choose.
Was it easier for you, school? Like,
It kind of did, yeah. I mean, some things did, and I struggled with a few things. In fact, this was my running joke as a doctor. I'm not a doctor anymore, but when I was a doctor, my running joke with my patients was, that I actually failed one class in my life. You guess what? The only class I ever failed was handwriting. Second grade, I literally failed handwriting, and I had to take summer school to have better handwriting. And I said, what they do then is they take all of those people and they shunt them into the pre-medical track because doctors have such terrible signatures. So my writing isn't very good, but yeah.
what interests you in medicine? When did you decide that? Was it high school you were thinking about doing that? Did you decide it when you went to college? When did that happen?
Actually, great question. When I was in high school, I still remember this because I have this top 3 list. This was from when I was in middle school, actually, of what I wanted to be when I grew up. Number 1 was a professional tennis player. Number 2 was a DJ, and then number 3 was a doctor. So I played tennis in high school and college, and then I realized I'm not ever going to make it to the pros. I got pretty good at it, but I got as good as I was going to get.
Yep.
And then I realized that's not for me anymore. In college, I got to the point where I needed to decide: do I want to go down the investment pathway or become a doctor? And I chose becoming a doctor. And so once you do that, your life is basically set. You can't change your pathway for the next 10 to 15 years or so. It is insane. And you're just on this path, like it or not. So I finished my 4 years pre-med in college. I was a biology major. And then 4 years of med school at the University of Minnesota, and then 6 years of residency and my fellowship. So when I got out of residency and fellowship in 2008, I was a board certified diagnostic radiology and a fellowship trained interventional radiologist. And that's basically an image guided, minimally invasive surgical guy. So I put catheters in people and stents and treat tumors and do all this weird stuff that most people have never heard of.
How long did you practice, by the way?
Practiced from 2008 in private practice all the way up. I just retired in September of 2021.
Interesting. Okay. So even last year, you were still practicing when we were probably talking on stage a few times. Okay.
I was.
You knew you were probably on the way out at that point, right?
I did. Yeah. So, and because Vailshire, so I founded Vailshire in 2013, started managing money, my hedge fund in early 2014, started doing separately managed accounts from the RIA side of the business in like August of 2014. So I've been doing 2 careers since 2014. It was pretty intense. As you know, you're a busy guy too. And so I finally got to the point where Vailshire could, support the family and I could leave medicine and I'm the happiest guy in the world.
I want to get to Vailshire in a second, but before we do that, I want to go back to the medical thing because, like I told you earlier, I said my cousin is a surgeon, so I understand the commitment and dedication it takes to get to that point. To give up that is unbelievable because it's a huge part of your life. You got to think about this. By the time you actually become a doctor, you're like in your early 30s, and it's like for your adulthood, it's almost your entire adulthood, right? Like your entire adulthood was making no money, being used by the medical field, right? They pay you nothing in residency and fellowship, right? They pay nothing, and then you become like a junior partner or some group or something like that. So when in school, I guess you had an interest in finance, and you went for your MBA as well simultaneously while you were in medical school, or pre-med rather.
No, so I actually got my MBA. It was only about 3 or 4 years ago. I went back and got my MBA in finance, just kind of for fun. And I wanted to see if it helped me run my business better and be a better investor. It was no and no for both of those. I tell people all the time, I mean, literally, like if you're thinking of running a business or you think you want to do it for those reasons, don't do it. Just go start a business. If you want to do it, don't worry about the MBA.
Yeah, honestly, bro, like that is so true. Reid Hoffman has a famous quote, which is being an entrepreneur is like jumping out of an airplane, trying to assemble an airplane on the way down, and you're like grabbing the parts in the air, and
Yes.
I kind of modified that. I always say it's like jumping out of an airplane trying to assemble your parachute on the way down. It's just easier to say, but it really is, And then the good news is, if you hit the ground, you don't actually die. You just back in an airplane, go back up again, try it again and again, which I've done. Yeah, I'm looking at your background right now. So it looks like undergraduate from 92, 96, and then 2 years, University of Minnesota. Then you went to Wisconsin. Yes, it's all successive. I don't know why I thought you had an overlap. So it was very, very successive. 92. Yeah. Okay. And then, yeah, you're right. Like, so a couple of years ago, well, of course you're right, but you did your MBA after the fact. So what is this? This is medical school. And then that's fellowship, I guess, when you're board certified Wisconsin radiologist. Wait, I'm a little confused by that.
So yeah, it's kind of confusing. Most doctors don't do stuff like this,
They
but
don't
I
do
had
this. Yeah, my cousin did not do
yeah,
this.
so sort of like two hats that I wore. I always wear multiple hats. So the two hats at the time as a doctor, diagnostic radiology. So that's the guy who reads, if you go in and get an MRI or a CAT scan or ultrasound, I'm the guy that would read the reports for that's in your medical records. And then interventional radiologist, that's basically image guided procedures. So biopsies and
Got
just
it.
lots of crazy things. Yep.
So it's interesting. And you did that second, right? The interventional.
That was at the very end. Yep.
And what was the reason for that? Do you make more money doing that? Was that like a monetary decision for that, or?
No, definitely wasn't monetary, but I did make more money doing that. Just because I like, I'm a procedural guy. I just enjoy doing things like that. It's people. I don't know.
Otherwise, you're just sitting there looking at scans all day, right?
You're just looking at a screen. Yeah, I like being up and active. I like treating patients. I like kind of encompassing all of the care. Now, the downside of that part of it is that made me. I was on call every fourth night, so I was the guy. So for example, people would come into the emergency room who got in a car crash. They're bleeding internally, internal hemorrhage. I was the guy they call sometimes to, I try to stop the bleeding. So we bring them on my table. I put a catheter in them. I look for the artery that's pulsating blood into their body, and they're dying. And I put little things in there, little particles. It's called, whatever we put in there to stop the bleeding and keep them alive. And so those are the kind of things I do. It's really fun and exciting when you're young, and then the older you get, the less fun and exciting it gets, and it just gets kind of harder and harder to get up at 2 a.m. and do those kind of things.
I have a friend. He lives down the road. He moved actually, but he lived down the road, and he owns a radiology center. His parents founded it back, I think, in the 80s or so, and in the area I live in, there weren't independent radiology centers back in the day. You had to go to the hospital. And so they did that, and they own all their equipment and everything like that. And they have CAT scans, and they have, ultrasounds, all kinds of different scans in this place. It's a decent sized facility, but he doesn't expand it. He's got the one location, kills it. And he's fed all the business from all the local doctors and stuff like that.
I'm sorry. So I was just going to say I was a partner in a group just like that. So here in Colorado Springs, we own several of those standalone businesses, but also affiliate with the hospitals.
Yep.
And so, yeah, they're definitely like cash gushing machines. It depends on the patient population though as well.
Yeah, and we're in the Jersey Shore. It's highly densely populated, so he probably does really well. But what I was gonna say is, I thought was really interesting. He was telling me that like the radiologists, they're not all in his facility. They're remote, and they're independent contractors now, and they get pushed to the scans, and they look them over, and then they give back the results. Did you work from home a little bit when you did this, or?
Yeah, and I have kind of a funny story. So when I came out in 2008, and I came here to Colorado Springs, I worked for the local group and became a partner here, and working in all the hospitals. It got to be too much to run Vailshire from these hospitals and clinics, because I obviously can't be doing both jobs at the same time. So I actually quit from that job and started doing just what you're saying. I became a teller. So I quit doing interventional radiology, so I wasn't on call anymore. just started doing diagnostic radiology, teleradiology from here in Colorado Springs. I actually worked for a group in New York for the last 2 years, so I could work from home. And then that spot behind me, that was where I did Vailshire. And where I'm sitting right now on the other side of the room, I had six monitors spread out where I could see all the images from the patients.
It should
in
be the
Albany.
opposite. 6 monitors for all your charts.
Yes,
Right?
exactly. That's how the traders do it. That's not
right.
me, but yep.
No, it's funny. Okay, so the interest in finance came about when? When did you start having interest in this?
Well, so college is where I had to make that decision. I
Mhm.
could either go down finance or I could become a doctor. Chose becoming a doctor. Then I literally just basically forgot about finance because you're so busy being a doctor
Mhm.
and learning, doing all the training and residency. I got out in 2008, and probably within about a year, I remembered that I loved investing in finance, and I started a blog actually back in the day, just my own little personal blog, teaching people how to invest on their own. Like, you don't need an advisor. I can teach you how to do this, and quickly got picked up by the Motley Fool, if you've heard of
Mhm.
them,
Yeah.
and went out and met the Gardner brothers and all that kind of stuff, and good guys, and then started writing for Seeking Alpha as well. And then by that point, I had enough of an audience and people who liked my style and liked my stock picking, abilities, and they'd be like, "Hey, Jeff, can you manage my money? I really like how you do it." And I'd say, "Oh, yeah." I said, "You know what? Super nice, but I'm actually a doctor. I just do this kind of for fun on the side."
It's like, Joe, I'm a lawyer.
Exactly. And so, but it put this little idea in my head. I'm like, well, I really like this stuff, and man, if I could do this, that would be kind of fun. So that's what gave me the idea of, if I could do anything in investing, in the world of investing, what would I do? And I quickly dwindled that down to, I want to be a hedge fund manager. Why? Because I'm kind of I like to do my own thing. I'm an independent thinker, kind of a maverick in sort of a way, for better and for worse. And I don't want to be a financial planner. I'm not a salesman. I can't stand salesmen, and I just don't want to sell people products that don't benefit them. I just want to help people, and I'm a pretty good investor myself, so I want to help other people invest wisely. So the mantra of Vailshire from day one was live well, invest wisely. So the live well part kind of speaks to my healthcare side, invest wisely are the investment side. So yeah, I've always just kind of had a passion of teaching people how to invest well. And most people, what I learned kind of that humbled me, they don't want to be taught. They just want somebody they trust
Yep.
to help make them money. And
Crazy to me, but that's actually true. Yeah. I mean, this is you spend all your time to generate this wealth, and yet you want to pass that responsibility to somebody else is just incredible to me.
yeah,
My cousin doesn't do that. He learned investing himself, but most of his peers in the industry and most doctors that I know, they really don't know much about it. And when I talk to them, they think they do, some of them, but you could hear they don't know what the fuck they're talking about. So
what I've learned, and it's not just doctors, but but definitely is doctors, but people who have high levels of income, they can cover up really bad investment decisions because they have a wall of cash flow coming in. So it
that's
doesn't
right.
really matter if you're not a great investor. So yes, people generally with higher incomes really make really dumb decisions for the most part. There obviously are exceptions to that rule, but it's pretty interesting.
Don't you think it's like, and we're way off topic and I want to jump into the Bitcoin and everything else, but it's really interesting subject. I always found it interesting. Like, I feel like the medical school is doing an injustice to the doctors. They should be teaching them about money, because these guys are going to make, and girls are going to make a lot of money in their career, and they're not teaching them anything about the money they're going to make. They're just teaching them about the medical field itself and what they're going to practice in and all this kind of stuff. It just doesn't make any sense to me. It's like, we're going to send you off to the world. You're going to make millions of dollars and you have no idea what to do with the money. Like, good luck with that. In a world that we live in today, it's more important than ever because there is no risk-free alternatives and stuff. So anyway, what were we going to say?
Well, just to your point, yes, they should be teaching personal finance. They also should be teaching how to run a business too. They should have a mini MBA course, kind of mandatory, because so many doctors come out and they're doing private practices. They literally have no idea how to operate a business, but they're instantly thrown into that. So yeah, there's a ton of, they have a really steep learning curve on that kind of stuff, and they get thrown into it from day one. But yeah, I agree with you.
One thing I saw, I was checking out your LinkedIn, trying to understand your background a little bit better. You did have 1 year, less than 1 year as a barista at Starbucks, it says. Why did you put that on your LinkedIn? I thought that was funny.
Because I like to tell people, and I mean this sincerely, like, I grew up kind of poor and redneck, and I'm like just a regular guy. And I like to encourage people that if I can do what I have done, you can too, right? I mean, and that's why, my Twitter handle, I say Dr. Jeff Ross, pleb counselor. Like, I'm literally just here. I'm not trying to fleece you. I just seriously want to help you live well and invest wisely. I was a barista. If you're a barista too, you can go to med school if you want. You can start your own business if you want. You just, honestly, so much of it just comes down to ambition and courage, and just be willing to take that first step, and then you'll figure it out as you go. But so many people are scared to take that first step. Obviously, more than I do. You've started your businesses.
I totally know, and I will tell you, like, I'm good friends with American Hodl, and we've debated this on Clubhouse on stage quite a bit. Which he's a slight generation younger than me, right? You're a little bit older than me, actually. A couple
I'm
years
47.
Older, yeah, so a little bit older. I'm 40. I'll be 43 soon. So and Hodl's like early 30s, right? And so he's like telling me they're on a stage one time. I jump on and I'm listening. This is months ago, like last summer, and they're all complaining how it's so much harder now. And I'm like, guys, it's always harder. It's always harder for the next generation because of the system that we have, which we'll get into, right? That it's always going to be that way. But it's not impossible. The things you're saying make it sound like, throw your hands up in the air. We give up on the system, and the system's broke, and we have no fighting chance. I don't believe that at all. I really don't believe that. I think you're right. First thing is, you got to believe in yourself. That starts with believing in yourself, and then making a commitment towards whatever it is you're doing, and then being consistent and persistent on that. Right? Most people just give up. That's the problem.
Yeah, I mean, right. The key is just survival. That's what most people don't get. Most people have what they don't understand is they have too high of expectations right away. They think, I'm going to start some business. I'm going to instantly be a millionaire, be super famous. Everybody's going to use my product or service. It just doesn't work like that. You just got to get it out there. You got to hone your ideas, keep trying, keep trying, keep trying. If you can just stay alive after 2 or 3 years, that's a huge victory. And then at that point, you can start kind of honing in things, start figuring out how to become more profitable, all that kind of jazz.
It's like the Amari's Law line. A friend of mine, Lou Kerner, always says, we tend to overestimate the effect of technology, in this case, maybe Bitcoin, in the short run, and we underestimate the effects in the long run. It's the same thing about whatever it is you're working on, right?
Absolutely.
You overestimate what you're gonna be able to do, but you underestimate the long term. So you got to stick with it. I got my kids; they go to Kumon for this exact reason. It's just this constant, persistent effort, compounding efforts that they just consistently are doing their math and they're reading every single day, 365 days a year, and they're going to do this all the way up until they go to college, where everybody else is taking off in the summers, the weekends, holidays. And so there's no possible way that my kids won't be ahead of everybody by the time they graduate if they're just consistently, incrementally doing a little bit more every day. It's like that with everything in life,
Right.
So let's dive into first of all, I want to just recently, Biden put out this thing. They're going to have an executive order on Bitcoin. They think it's a threat to the democracy, and I've been saying I think the government. This is way, way, way earlier than I thought they would ever say something like this. But I thought they would say that at some point at a $700 to $1 trillion market cap. It doesn't seem. It seems really premature, actually. But at some point, it is a threat, right? It is. He said to national security. Maybe if you believe in hyper Bitcoinization, which I don't know, does Biden believe in that? Does the administration believe in that? Because in that case, it would be a threat to the ability to have a larger military and all this kind of stuff. So, what do you think of that commentary coming out? What do you think they're really talking about? What are your thoughts?
So first of all, 2 things. It doesn't surprise me at all. This is what we should all be expecting, right? We have this new nascent asset class that's going to come over. It's getting bigger and bigger. Bitcoiners know the potential of this. Obviously, we know where it's going. It's just a matter of time. So at some point, it's going to start clashing with the U.S. government and all governments across the world. It doesn't surprise me, though. And why is that? The number one weapon of the United States is the fact that we have the world's reserve currency. The weapon of choice is sanctions, right? We can do economic sanctions on our enemies. If we don't like what Iran is doing, we don't like pick any country anywhere in the world. Boom, we're going to shut you down. We're going to block your accounts. We know all of the capital flows in and out. You can literally just ruin countries with the flick of their switches. So why don't they like Bitcoin? Why do they see it as a threat? Because you can't control Bitcoin. Bitcoin is completely decentralized. It's totally secure. It's totally permissionless. People don't have to ask permission to trade massive amounts of value to each other across time and space instantly with Bitcoin. The U.S. government, and if you are a statist and you think that the U.S. should have that authority over the rest of the world, you hate Bitcoin. That's why some of these politicians, especially these old, the old boomer politicians, some of them, not all of them, but some of them, they're coming out and being very, very, very defensive and aggressive towards Bitcoin. And you know what? They should be. It definitely threatens them. It threatens the status quo for sure. So doesn't surprise me at all. To me, it doesn't make Bitcoin look worse. It makes it look better. And I would say this actually gets back to why China banned Bitcoin, right? Because China, especially China, very communist, they want control, complete centralized control over their country, over their population. They can't control people through Bitcoin. So they hate Bitcoin. They want it out of their country. They want to have the Chinese yuan. They want the central bank digital currency to be the thing that they can control, manipulate, do whatever they want. They have their agenda, and Bitcoin does not fit in their agenda because it can't be controlled. So that's how I look at that. People talk about, America is this free capitalist country. It is not. It is. We are totally socialist. We are totally centrally controlled. The people that be, the powers that be, hate it for that very reason. And so that's Bitcoin, by the way. It also affects altcoins, these crypto exchanges, all that other stuff is going to be much more affected than Bitcoin. I think even though Bitcoin is the main scary thing for these guys, the crypto world is also this thing, but it's not decentralized like Bitcoin. It is accessible to the SEC and to the other powers that be. They can come after crypto exchanges. They can come after these centrally controlled altcoins. And I think we're going to see more to come on those as well. Stable coins as well. That's another issue.
So what about recently? I think I read that Russia put out some commentary that they want to ban Bitcoin mining as well, like China did. Did you see that?
They did, but then Putin just came out and said, basically, no, that's not true. Like we're pro Bitcoin for the most part.
There's
and he
competitive
said,
advantages,
and we would have competitive advantage, and they would. And so this is the game theory. So which of the big countries are gonna go first and decide to start mining? I think it's brilliant, and I think they should do it. If I could whisper in the ear of anybody, higher up in the U.S. government or the Federal Reserve or the Treasury, I would say, start mining Bitcoin, buy Bitcoin, get on it. The first country to do this is going to be the most powerful country, the most pertinent country in the future.
Do you think he's going to mine Bitcoin? Do you think they're going to do that?
Well, they might. And they should. I say more power to him. Obviously I want America to win because
it says here, I'm reading an article. It says that they have, it says Russia is home to 11.2% of Bitcoin's global mining hash rate currently.
Right. Yeah, and I think the U.S. is about 30% right now. China used to be about 50%, but they're out of the picture now. So I just think there's this huge gaping hole, and it's either the U.S. or Russia who can decide who can become the number one player if they wanted to. It's a massive competitive advantage. As game theory works, first one wins. So go for it. That's what I would do.
So can't say who. Friend of mine, pretty credible source, said that the rumor is that China will begin enforcing their ban. And what I said, what does that mean? It means that they may lock some people up that we're not supposed to still have the Bitcoin anymore on legacy exchanges, et cetera. It seems, and this was told to me about a month ago. Okay, this is in December. So maybe it was like towards the end of the year because maybe that was the enforcement. I don't really know. And maybe that's why there was a lot of selling in Asia. I talked to Will Clemente about that. And he was saying there was a lot of selling in Asian addresses in December. Did you hear anything about this? Is there any rumors you've heard about this?
I haven't. I don't have any more insight into that. I heard that little headline rumor, I guess I should say. You hear everything on Twitter, and some of it's true. Hard to know what's true. But I would say, yeah. Here's my take on it. Nation states cannot stop Bitcoin. Absolutely. It's stopping Bitcoin is as easy as stopping the internet, but they can certainly make life miserable for their citizens, right? So China, they can start arresting people. All that it did in China when they banned it, obviously the miners had to move, but all it did is drove the use case, the people who wanted to own it, underground, right? So the big black market throughout China, I heard that increased by like 700% or something in the ensuing 3 to.
And that's what they're saying they're going to try to enforce if they see that you have it and try to really.
Right.
And all I'm saying is it's going to push more supply into the market in the short term, makes the price go down in the short term. You and I will talk about the short term versus the long term in just a couple of seconds. And that's really all it is, right? Like I tell people, all of these things are noise and opportunities to buy Bitcoin cheaper when it happens.
Exactly. And I feel terrible for Chinese citizens, right? I don't wish them any harm. I feel terrible their government. If our government came out and said it is illegal that you own Bitcoin, we will throw you in jail. I would face a really difficult decision, right? Because I really believe in Bitcoin. I really believe in the freedom it gives me.
I think you have to sell and see where the new price discovery is, and then come back, because it's probably going to drop dramatically, and then it's just going to slowly climb, right?
Right, right.
But maximalists, my maxi friends would say, "What are you talking about? What are you going to put it and buy dollars?" And it's like, well, yeah, because you're going to buy more Bitcoin when it drops. But I mean, like, let's not be ideological here, you know?
Yes, yes, yeah. You try to preserve the net worth.
You're not going to be the last one standing.
Exactly, exactly. So, anyways, I feel bad for Chinese citizens, but hopefully, eventually they'll come around, and hopefully it's not too late for them. But they're shooting themselves in the foot. I think China was on the ascent to become kind of the number one world's economy, and to basically dictate the flow of the world for the next several decades. And they literally, I believe, shot themselves in the foot by banning banning Bitcoin. So we'll see.
Okay, you put out a recent tweet, and you said you had a current outlook for Bitcoin, and
Mm-hmm.
you have the current outlook is Bitcoin the network versus Bitcoin the asset. Bitcoin the network, short term, wildly bullish; midterm, wildly bullish; long term, wildly bullish. Right? Bitcoin the asset, bearish on the short term, bullish in the midterm, and the long term, wildly bullish. And you wrote, hopefully this clears up some confusion. I'm guessing you're talking to the Bitcoin maximalist community when you say that. Let's go through this. Why
Sure.
are you wildly bullish in all terms on the network, and what's going on in the short term and the midterm for the asset itself?
Sure. So Bitcoin itself, capital B, that's what I call Bitcoin, the network. That's basically all of what Bitcoin is, kind of fundamental. It's sort of the nuts and bolts of Bitcoin, the network adoption. Those kind of things are growing. The use cases. So the base layer of Bitcoin is what it is. It's not ever really going to change significantly. It's going to spit out new Bitcoin every 10 minutes till 2140. It's totally secure. It's getting stronger and stronger. Network adoption is rapidly increasing. Use cases, especially like kind of layer 2 use cases, Lightning Network, and things like that, are growing very rapidly, exponentially right now. That's all fantastic. That is the kind of thing that causes Bitcoin to be a chronic secular bull market. It's going to go up and to the right for a very, very long time, at least for decades, I think, and maybe possibly longer. I don't know. We've never seen anything like this before. Within that huge channel that's going up and to the right, there are cyclical bear and bull markets going on. So very bullish. I have no doubt that Bitcoin is going to become bigger, more accepted, more ubiquitous year after year, decade after decade. That's that intrinsic value of Bitcoin. You can see that coming out in lots of factors that you can see those on-chain kind of analytics. Adoption, OGs buying big chunks of it, putting away in cold storage for long periods of time, those kind of things. But the price of Bitcoin trades on the margin. So the Bitcoin that's available on exchanges is tradable, and that is susceptible to the whims of business cycles. And so I'm a macro investor. I think top down. I think how are the macro conditions right now? How does that affect different asset classes? Bitcoin, I firmly believe, is just another kind of major asset class to trade now. It currently trades like a risk-on asset.
Mm-hmm.
What does that mean? That means when things are bullish, when the federal government, when the Federal Reserve is highly accommodative and putting tons of liquidity into the system, risk-on assets tend to go wild. They go up and to the right. They tend to be great investments. But when things are bearish, when the macro does not look good, when the economy is decelerating, when inflation is decelerating, then risk-on assets do terribly. So things like tech stocks, Bitcoin, obviously, altcoins, which are they ride the coattails of Bitcoin, they get crushed. On and on and on. We could go through all that kind of stuff. Which asset classes perform well?
I believe the Federal Reserve and interest rates, the old saying, "Don't fight the Fed." It drives everything. I was saying this a lot last year on Clubhouse, and Bitcoin maximalist friends would say something like, "Bitcoin doesn't care about the Federal Reserve, or Bitcoin doesn't care about interest rates." I'm like, well, the people who own it do,
Right.
And increasingly, the people who own it actually really watch that shit because they're risk on managers and stuff, So
Exactly. There's a ton of confusion over this, and I spend way too much time on Twitter trying to explain this to people. But people have a really hard time separating the two things. That's why I like to talk about Bitcoin, the network, capital B, and Bitcoin, the asset. Bitcoin, the asset, is the price that fluctuates. It's the things you can own in cold storage, or that you buy on an exchange, that you trade other things for, other money for. Just because Bitcoin, the network, is not affected by the Fed, and The government can't stop it. All the stuff we were talking about earlier, that it's growing on this secular growth trend of adoption. It's just like the internet. It's just infiltrating everything. It's someday going to be everywhere. Everyone's going to own some Bitcoin at some point in the world. Almost everybody. I believe that probably 10, 15 years from now. Just because that is what it is, that doesn't mean that the price isn't affected by, secular trends, by business cycles, by the Fed, things like that. So yes, when you are in so here's what I think happened. Let me back up just a second. I think that we had a business cycle peak at the fourth quarter of 2021. To me, it's very clear that everything is basically peaking. We're still getting numbers from December. So people are saying, look how strong the economy is. Look how bad inflation is. And it is. It's very high. People still talk about it like we're still ascending, we're still accelerating as an economy and in inflationary terms. And the Fed is making it even worse by reiterating that stuff and say, look how strong the economy is. Look at everything. This is the time we want to be putting on the brakes a little bit. This is the time that we should get hawkish and take away our accommodation, our highly accommodative stance of the market and decrease liquidity. I think they're doing exactly the wrong thing at exactly the wrong time. So they should not be getting bearish right now. They should be looking ahead a couple of months and quarters and saying, I think we've peaked. I think that actually GDP is going to start decelerating from here. I think the inflation is going to start decelerating from here. This is the time where we should start getting cautious. I think that they should have, all the things they're talking about now about taking away liquidity, they should have been doing this a year ago, all throughout 2021. That would have been a great time to do it. But of course they didn't. It's uncanny, their ability to do things at exactly the wrong time. And I can't figure out if they do that on purpose or what. Is there some ulterior motive to this, or I don't know what it is.
Yeah.
So different asset classes perform in expected fashion when we're in these kind of things. So it's basically a risk-off environment right now. And again, it's like, don't shoot the messenger. I'm just telling people what I see. I'm sorry, but that means Bitcoin price is going to go down. And clearly it is, right? Since November 8th or 10th, whenever it peaked, U.S. small cap stocks also peaked at exactly that same time. Then they started their descent. I made the mistake, and I'm very public about this. I was still bullish on Bitcoin. I thought we were going to see a parabolic move higher,
Me too.
either in Q4 of last year or Q1 of 2022. I was wrong. So towards the end of December, I thought, you know what? Bitcoin is sniffing out that there's trouble under the hood. So are U.S. small cap stocks. There's trouble under the hood. We're starting to decelerate from an economic perspective. I need to get less bullish. So I flipped from bullish to neutral towards the end of December. And my hedge fund did terribly in December because I was wildly bullish. I had call options, and we were going to light it up, and I was long miners and crypto exchanges and all this stuff. Then in early January, I said, this is for real. And it got for real for me the first time Powell spoke, which was probably the first week of January. And I'm like, oh, wow, he's actually hawkish. He's like talking about raising interest rates, and he's not kidding around. That was the very moment I flipped bearish, and I took off all of my long positions. I went to cash, and then I quickly went short. So since then, I've been shorting multiple asset classes, and we can talk about that if you want to, what I do for my hedge fund.
What I want to talk about first, because for a lot of people that are Bitcoiners that are not macro finance, they've never invested in equities. They got into Bitcoin because they were buying drugs on Silk Road. I'm just kidding. But like honestly, like a lot of people, they don't fully understand the macro. Why don't you explain to people why it is that when they adjust the interest rates, that impacts risk assets like equities, and then obviously, Bitcoin it falls into that bucket. So explain to people that the cost of capital and why that happens, and why why everything gets reset.
When we're in an environment where where interest rates are low, that means cost of capital is low. That means people and businesses, especially that have access to low cost of capital, can take in a ton of liquidity. And if they are able to produce high growth rates, high revenue rates, high sales rates, and then generate profits, those companies just crush it. So we've been in an environment since the financial crisis, where liquidity has flooded into the system, and any company that could harness or gather that liquidity, that cheap credit, and generate revenues from that, they crushed it. Amazon, Netflix, Apple, pick any growth company, Tesla, right? Cathie Wood, any stock Cathie Wood invests in, all those things crush it when the cost of capital is cheap and when interest rates are low. When the Fed starts to take away that liquidity, when they talk about raising rates and interest rates go up, that makes people think that, well, what all these growth companies that could just get free money basically and then generate revenues from that, they can't do that as easily anymore. That gets harder for them. So their future profits come down. And so when you're buying a stock, you're buying the future earnings, the future profits of those companies. Now people think, well, now we need companies that actually can generate profits in crappy conditions. So like when borrowing rates are high, but companies that can still just kind of power through it and generate earnings,
Thanks.
value companies. So companies that have been left for dead for the last 12 years or so, then they start shining through. So that's why we see that shift from growth to value. People are like, okay, things are actually going to get real for a little bit. Our US dollar for the first time in several years is actually going to kind of be a little more sound. Kind of a better measuring stick. That's when the value companies tend to do better and outshine. And that's the kind of moment we're in right now.
And so a lot of people talk about looking at the yield curve between the 2 and the 10. Maybe just walk through that a little bit for a second. So what is it that you're looking at when investors are looking at, what is it that you look at there, Jeff, to help people see, so they can see what you're seeing?
Right. So in this kind of setting we're in right now, what we're seeing is actually a very rapid flattening of the yield curve. So that means, what do I mean by that? So you can buy treasuries, very short dated treasuries, all the way to treasuries that go out 30 years. Mm-hmm. And there's this whole curve, and they generally make this curve that kind of goes up again, up and to the right. I don't know if this looks, on the interest rates. Exactly. Yeah. When the economy is working well and people are generally optimistic about the future, they think we're going to grow well into the future, you see the yield curve extending up and to the right. That's actually a healthy sign. When people start to get kind of nervous and they think the future is not looking so good, I don't know that we're going to grow. We might be seeing kind of a stagnating economy. The longer term yields start to fall down more. And then at the same time, the short end of the curve, the shorter term yields, they start to rise.
Now just to interject real quickly, that is a function of buying and selling of the bonds, right? So just explain.
Exactly.
It's the inverse.
Exactly. Too. So say we're talking this end, the long end of the spectrum, the 30 years. When those yields fall, that means prices rise. Prices and yields always move like a teeter-totter back and forth. They're exactly commensurate with each other. So as yields are falling, that's when you actually want to own long-term bonds because those prices are rising. Now we see that in a situation like we are in today, actually. We're getting into a risk-off period. What people do in risk-off setting is they tend to buy safe haven assets like long-dated U.S. Treasuries. That means they're buying, so they're over on this side of the teeter-totter, they're driving the price up, yields are falling on the long end of the spectrum. That's
because
flattening.
The coupon payout doesn't change, so the price of the underlying is going, yeah.
Yep. And so that's flattening the yield curve. Why does that matter? Whenever you see an inversion, it's supposed to go like this, but sometimes when you see the two, as you mentioned, 2-year and 10-year yields, they actually come down and they're similar, and then they actually go in the opposite direction, and they invert. That's called inversion. For whatever reason, and people talk about why this happens, but usually within about 18 months of that happening, we go into a recession as an economy. So that's actually a very bad sign. It doesn't mean you're going to instantly go in one.
Right.
I think it's 100% of the time within like 6 to 24 months, the economy goes into a recession when that happens. So that's a big deal, and people pay close attention to that. We are not super close to that point now, but we're rapidly flattening right now.
How many months away do you think we are if it continues?
If the floor drops out and things get really ugly, I think it could happen as soon as 3 to 4 months from now. I don't think it's going to happen though. I think we're going to get close, and then we're going to kind of recover a little bit from there.
And that recovery will be because the Fed changes its narrative, correct?
Exactly. The Fed. So I think the closest scenario, similar set to where we are today, is very similar to fourth quarter of 2018. We had almost exactly the same situation in some ways, not every way. I'm not saying it's exactly like that, but it's very similar. The Federal Reserve, Powell, he was a new guy, the new chair. He's like, we are tightening. The economy's strong. We are tightening. And guess what? The stocks sniffed that out. They didn't like it. They started to descend. And then he came out with his infamous speech where he's like, the raising of rates is on autopilot. And the market flipped out. Like, autopilot? Are you kidding me? Like, we're already hurting. And so the market just tanked. And then he did that, it's infamous because was it December 23rd or 24th? He came out, did literally a 180-degree pivot.
It was December 24th when it was the bottom.
And said, we are no longer raising rates. We're going to become highly accommodative. The risk on assets just ate it up, and they V-shaped recovered, and it was, we were off to the races. So that's the kind of setup I think we're in right now, and he's tightening exactly the same way he said he was going to before. And the markets are descending. The markets are saying we're not happy, we're not happy,
Yeah.
we're not happy. And unless he pivots, they're going to get more and more and more unhappy for all risk-on asset owners.
So the Bitcoin community, and Joe Carlos Arley being one of them, does not believe that they can do it. This is all a bunch of BS. There's nothing that the Fed can do. The basically the tail wagging the dog. The market's basically going to dictate the Fed's policy. Do you agree with that? Do you think that this is a bunch of, and what's the point of even saying anything at that? I don't even understand. Just trying to let some air out of the balloon, essentially. Like what's going on?
Well, what was interesting, what I was really paying attention to when Powell just spoke was he said nothing about the markets. I tweeted about this because I said the Fed talks about their dual mandate. They talk about their dual mandate is stable prices and maximum employment.
Yep.
I think what their true dual mandate is supporting the markets, the stock markets mainly, and stock and bond markets, and or inflation. They can tackle one or the other, but they can't help both because they're sort of contradictory to each other. And so this, when Powell was talking, all he was talking about is inflation and getting inflation under control. And he thinks they're going to help drive it down towards the end of the year. So basically, hawkish, hawkish, hawkish. We're taking away support. We don't love the markets anymore. Now we love inflation. We're going to focus on inflation. I think they're actually going to try to raise rates in March, even with the markets tanking. We might see kind of sideways to slightly down markets for the next month or so. And I think if they come out and get and try to start raising rates, I think they actually do get a few in. I don't know how many. I'm guessing I think maybe 2 to 4. But then I think the bottom truly drops out of the markets, and I think it gets really ugly. And then I think at that point he's going to be forced to do an about face again. The other thing, and sorry, I'm just kind of going on, but the other thing to consider is we're at midterm elections are coming up, so you can't tank a stock market right before midterm elections and hope even have a slight chance of getting reelected. So
well, it depends if the Fed wants him in.
Yeah, exactly. That's not how do you deal with that? And I don't know, and I don't know what their relationship and do they do jostling behind the scenes with each other, jousting. I don't know. So it's interesting.
Pump did it right in front of the scenes. He was the first president. I mean, when I was trading stocks, and he'd be out on the front lawn getting in on the helicopter and make some comment about Boeing or something, and bang, stocks would just crash as it gets in the air. You're like, what are you doing, man? So at least with Biden doesn't do that. I got to give him that much.
Yes, he has some tact. That was hilarious.
So let's talk about the dual mandate. In your case, I actually think it is a dual mandate. I think it is full employment, and I think that the market is about employment, right? Because if the markets crash, what happens? They eventually lay people off, and that impacts employment. Don't you think?
It is. They go together for sure. All of this goes hand in hand for sure. And the people's perception of how wealthy they are has to do with how the markets are doing as well. And employment. You need to be employed, and you need to have, some assets that you're managing so you can see that wealth effect can grow. And if one of those things isn't playing out right, people are unhappy. So they need to keep the people happy. So they're in this crazy spot where they're this juggling match of trying to bring down inflation to not severely diminish people's purchasing power. They're trying to keep people employed, and they're trying to keep the markets happy. I just think they're juggling too many balls right now, and they kind of have painted themselves in a corner. And they're in trouble. I think these are kind of symptoms of the final stages of this Keynesian economic experiment that we're in, this whole credit-based system with this just massive debt expansion, really low interest rates, and money that's constantly declining in purchasing power. At some point, it ends really poorly, and we have these periods where we have this incredible market growth, but then these just massive kind of soul-crushing drops as well that really bring about a lot of market panic. So the Fed's in a tough spot. We'll have to see what they can do. I'm watching with interest, but I'm definitely not optimistic on the coming weeks and months.
Earlier, you said cyclical bull and bear markets on the long-term growth of Bitcoin. Do you believe in the cycles? Like you're talking about the cyclical cycles of all markets in general. You're talking about the Bitcoin cycles. What were you saying there?
I don't believe in the 4-year Bitcoin price cycle. To answer that, I'm talking business cycles. I think everything is cyclical. Just like I think like I said, we've peaked in the U.S. from economic growth and inflation. Q4 2021, I think we decelerate from here. The major asset classes follow those cycles, and I think Bitcoin is not excluded from that.
Yeah, I think I agree with that. Let's take a stab at GBTC. So GBTC has trading at a discount. I think it was Bill Miller, one of the funds recently just unloaded a crap ton of it, which can't be good for it because they can't sell the Bitcoin because of the NAV issue, right? So what do you think is going to happen here? Like the SEC, I actually, Greg Foss got me on a call with Sean Cumby, who did the first spot ETF in Canada. And I asked him, do you think that the US will do it? He thinks absolutely. It's just a timing issue. Number one, curious what you think if they'll ever do a spot ETF. And number two, if they don't do it, I feel like the SEC has a mandate too, which one of those mandates you would assume, and it is supposed to protect investors' interest, right? So if you have billions of dollars invested into GBTC at Grayscale, and and this thing is way off. I mean, we're talking like a 30% discount to the net asset value that it should be at. Mm-hmm. What do you think they're going to do? Do you think they're going to step in and try to fix this in some way? Even if they don't allow them to become a spot ETF, they should allow them at least to change the rules of the trust or something so that they can like try to offset it for their holders. I mean, it's out of control. I mean, this could get really ugly.
Yeah. So this is like watching a soap opera. I mean, this is just fascinating. Here's my take on it. First of all, I think Gary Gensler is pro Bitcoin. I mean, he taught the class at MIT, right? Everybody gets that. I definitely think he knows the difference, and he's made it clear between Bitcoin and then altcoins. So they're two separate things. What I don't appreciate is the fact that he kind of lumps them together when he's talking about the necessary changes and the regulations that are coming. I think he's holding the Bitcoin spot ETF hostage in order to get his demands met for the exchanges cleaning themselves up. He wants to do know your customer, anti-money laundering across all crypto assets, and the easiest way to do that is through these exchanges that host the buying and selling of these altcoins. What does that mean? So first of all, I think it means those things are going to come under much greater regulatory scrutiny in the future, and that is a huge risk that I think most people who are in the altcoin crypto world don't understand yet. They just kind of think there's safety in numbers. They can't touch us. We're fine. They'll never do anything. I wouldn't be so sure. As far as Bitcoin is concerned, in the Grayscale Bitcoin Trust, I think eventually there will be a happy ending, right? So it's almost a 30% discount to NAV right now. That's incredible. So what that means to me is that at some point when a spot ETF is approved, and I do think that will happen, and probably by the end of this year is what I'm guessing, I think we're going to see a lot of progress. I hope, maybe I'm too optimistic, but that's what I think is going to happen. When that happens, that means the discount goes to zero, and people who hold GBTC will gain that additional, it's more than 30%. It's whatever it takes to get up to that, back to 100%. So I can't remember the numbers, 40%.
60. It's if you're down 50, you go up 100, right? So
yeah. So whatever that number is, it's a nice return on top of any return from Bitcoin. So personally, I actually own GBTC both in.
I was going to ask you. You sound like you're talking your book.
In Vailshire accounts and personally in my own like IRAs. I'm willing to wait, right? I'm in this for the decades. So at some point, a spot ETF will get approved. At some point, we're going to appreciate getting that extra appreciation on the return.
And I mean, it was like $22 a couple of days ago, right?
Yeah.
That's incredible.
Yeah.
Right. 22,000 is the reflective price,
Right.
Yeah. I mean, if you believe that that's going to happen, you're getting some cheap Bitcoin right now. Really cheap.
Right.
But nobody knows, so I
knows?
Put all your eggs in that basket, but
I should probably throw this caveat in. I always do. This is not individual investment advice, right? This is just entertainment purposes only. It's very smart to just own spot Bitcoin if you can. So try to own spot, try to hold your own keys, not your keys, not your cheese, all that kind of stuff. But if you're into that and you trust them as a custodian and you think you might want to try to gain that extra premium, then I think it's not a bad idea to consider owning some GBTC.
Okay, so let's do some price action here on Bitcoin. So Bitcoin, what is Bitcoin trading at today? I didn't even look. BTC is
right now 37,255.
Not bad. It's climbing back. All right, we have a bull day today on the markets. So Bitcoin's up 37,000. And what I want to know is you're bearish in the short term. Give me a timing and price that you think a bottom could play out during this whole craziness right now, and then we'll get to how you determine those estimates.
So first of all, and this kind of bugs a lot of people, but I always say I don't use price targets. I think price targets are for chumps. I have my macro view, and so what I tell people when they ask for a price target, my standard answer is lower. I think it's going lower. That doesn't really help people. Kind of bugs. So
how do you know when you rip off?
But so to honor your question, how much lower can it go and how soon? I think that we're going to see kind of a grind lower. Like I said, we're very similar setup from a macro perspective to Q4 2018. If you look at Q4 2018, the price of Bitcoin had descended from the end of December 2017 from about 20,000 to about 6,500 in November of 2018. And then you'll see just this huge just dump. It dumped 50% over the course of about a month. So it literally had already dumped something like 65%. And then on top of that, it dumped another 50%. Do I think we're going to see that this time? Not that severely. Why? Because we never went parabolic this time, so we didn't get excessively overbought. All of us, most of us, were waiting for a big surge higher. We never got it. I think it's because economic conditions deteriorated too quickly, so we just couldn't have that because it trades like a risk-on asset. So, what do I think is going to happen? I think nothing but ugliness. I have two scenarios that I'm playing out in my head. Either we do this continued stair step lower, like we've been having since about November 10th or so. We go down, sideways, down, sideways, down, sideways. And I think we continue doing that until it just kind of crushes everybody's souls and they're like, is it over? I hate this. This is the worst asset ever. That's kind of the mentality. Or we have a huge capitulatory event. Those are usually precipitated when you have negative economic conditions like we do now. And then some story catches the attention
Russia
of the public.
coming in as a minor. Yeah.
New COVID variant that's even worse than the Delta variant. Who
Apple
knows
puts
what
it
the
on
news.
The balance sheet. Who knows?
Yes, here's one that I would believe as a major one from a corporate perspective. Elon Musk tweets, "We sold all our Bitcoin."
That's not good.
That would be very bad, right? That would dump the price for sure. That could lead to a big capitulatory moment.
The worst case scenario is Michael Saylor says, "Actually, we just bought gold."
Yeah, or somehow Michael Saylor, something happens to him, and the board says, you know what, he's out. We're out of Bitcoin. We're selling all of our Bitcoin. Like something crazy.
That guy was crazy.
I don't think that will happen, but could it happen? Sure. You got to consider those kind of things. How low could the price go? I'm targeting kind of as a minimum low point about 27-ish thousand. And I think it could go much lower than that. I could see it going down to even like 15,000, probably pretty briefly. And somewhere in that zone, that's when I'm probably going to flip from currently very bearish to bullish. I'll take off my shorts. I'm shorting miners right now. I'm shorting crypto exchanges. I'm not shorting Bitcoin outright, just so people know that I'm not shorting Bitcoin, but shorting those other things. And that's actually been more fruitful because those go down even more when Bitcoin goes down. I'll take all those off and I'll probably get back in size at that point. And then I think it's just kind of a grind higher from there into the end of the year.
How do you determine that? So let's go over how you're making these predictions. You're looking at charts. You're doing technical analysis. Bitcoin maxis hate that shit, but like dick and ball charts and stuff, right?
Yeah.
But no, the truth is you're looking at this and give us an idea, give us some purview into your thinking as to how you determine where you think these will go.
Sure. So first of all, it comes from I'm a top-down macro thinker. When my macro is to me very clearly in one direction, everything I focus on from a TA perspective and from on-chain analytics and any other perspective, the macro supersedes everything. I keep using the example of the macro is like a tidal wave or a tsunami coming at you. You can have the most bullish TA and the most bullish on-chain analytics, but when that bearish tsunami hits you, you just get wiped out. So you can either ride the tsunami or you can get out of the way. Those are your two options to survive. That's how I view this. So when I look at my TA kind of stuff, I don't care about any bullish setup. I don't care what you show me, any chart you show me with whatever support line, what moving average. If you think that's a support line, I say hogwash. I don't care. I think it can blow through that as long as the macro conditions are here. People say it'll never go below 29K because that held back in July of 2021. I don't care.
It can get right to 29, and then to your point, you get some negative news that's really bad news, and then it just blows right through it. So you don't know what's coming. And by the way, that news is waiting on the sidelines to hit it,
Yes. And then everybody loses their confidence at that point. And the people who they were told that 29 would hold and it didn't hold, what is this crap?
Now everybody starts selling. In fact, actually, because you have all these people that consolidated and purchased and were holding from that cost basis, when it goes through, they feel like they have conviction until they actually are negative, and then they start one by one falling.
Yeah, then they start panicking, right?
Fear, yeah.
And so I feel like the town crier, but I'm like, I see this tsunami coming, and I'm like, I don't want newbies especially to sell when this kind of stuff happens. Do I think it's going to happen? Yes, most likely. That's why my fund is all bearish right now. Does it have to happen? No. Am I predicting the future? No. But I have to play the probabilities. That's what you do when you're investing. It's all about probabilities. And I don't want people who bought at 36,000 then just suddenly panic and sell everything if it hits 29 or goes down to 25 or something. That's when you want to be buying. I tell people this on Twitter Spaces a lot too. Like, I hear people, they're saying they're stopping their dollar cost averaging because they're so concerned about the price going down. And I'm like, no, this is exactly the opposite.
Increase. Yeah.
Yes, when something is decreasing in price, its value is increasing. You should be increasing your dollar cost averaging. You should be buying double what you were buying before.
Yeah, nothing's changed. It's just narrative. Right, exactly. Sentiment, narrative.
Yes, because the network, Bitcoin Capital B, is still growing. It's expanding exponentially. There's nothing different. There's nothing changed about where this thing is going 5, 10, 20 years from now. So this is the time to be buying, not to be selling.
So give us some indicators that you look at too, right? So like, do you look at the VIX? Do you look at the RSI, VIX for the stock market, the VIX? And then do you look at RSI as it relates to the S&P as well as it relates to Bitcoin? Some of the indicators that you look at. Obviously, you're looking at the yield curve and how that is. So give us some of those things that you look at as well.
Yep, definitely look at the VIX. In fact, in my hedge fund, my largest long position is VXX. So that's the way to be long volatility. That's been one of my best calls. I think it's when you're scared and you think something bad is going to happen, it's a great time. Again, not individual investment advice. That's a great short-term trade to put on, because if the market panics and drops, the VXX VIX spikes, goes up crazy. You can go up 1x, 2x, 3x, 4x in a day, in half a day sometimes, if people are really panicking. So I like that in my fund. That's why I have it as my largest position right now. I definitely do watch that. It has been basically coming. The product VXX is not a great product to own for the long term, because it just constantly deteriorates in value because it's rolling over positions all the time, futures based positions. So it's not a great long term thing to hold, but it's a fantastic short term thing to hold when everything is bearish. So yes, I look at that. What do I look at in Bitcoin? I look at two things that are totally different, and they give me two perspectives at the same time. So one thing that I look at is this thing called the logarithmic growth curve of Bitcoin. I don't know if you've seen that, but it's basically the price of Bitcoin, even though it's fluctuated, it's been in this channel that's growing, not quite exponentially, but kind of sub exponentially. And the price just fluctuates between those bands all the time. And I think it's going to, it's just a channel. And I think it's going to continue in that channel for the most part. It's not, there's nothing, there's no golden rule about it. It can break through either way. But for the most part, I think that's a great way to think about the long-term secular bull market. And then from a short-term perspective, I actually love looking at the 4-hour chart on Bitcoin. So what I do is I have up every day. I never shut it down. I have that logarithmic chart that goes up and to the right. And then I have a 4-hour chart that goes back to, like right now, it's going back for me through October. And I have kind of my lines drawn. And what I like then on those for momentum indicators, I use RSI, stochastic RSI, and the CCI. They're basically just three different momentum.
What's the CCI? I don't know that one.
Hang on.
So RSI, and what was it? There was two RSIs. What was the other RSI?
RSI, stochastic RSI, which is just basically, it helps you see changes in the RSI faster if it's flattened out. And then the commodity channel index, that's what CCI stands for. All they are basically is momentum indicators, but they're pretty solid. And for whatever reason, at least, every trader has their own kind of things they like looking at. Yeah. For me, the 4-hour chart in Bitcoin has been right on. I keep coming up and I'll say, I think this is a peak price. I think this is a peak price. It's going to be another lower high. And that's usually when the RSI peaks, the stochastic RSI is peaking and the CCI peak, and then it heads lower. And we just keep stair-stepping down, stair-stepping. And I'll even say, okay, now I think we're too low. I think we move back up again. And because even when it's been descending since November 10th, but it moves up and down that whole way. So it's kind of taking these stair steps.
And then you look at the yield curve as well, I guess, right?
I do. And so I'll use that. So like for my short positions in my hedge fund, when I see that we've spiked up, like if you're looking at a chart, the last time it really spiked higher was January 20th. And I said, this is a bull trap. What do I do practically? And when I see it spiking up and I see these momentum indicators being overextended, I put on short. So that's the point I use. Like, okay, I'm going to short Coinbase. I'm going to short Overstock. I'm going to short Riot Blockchain, Silvergate Bank, all these kind of things. And then I use that. And then if I've made profits, I'll take profits when those momentum indicators have bottomed and it becomes oversold. That's when I'll lighten my positions, if that makes sense. And I use that in bull cycles and bear cycles. It works pretty well for me.
So Jeff, what other assets do you trade in the hedge fund? You mentioned some of the Bitcoin mining companies as well as Bitcoin, but do you also mess around with like equities as well in your hedge fund? Like what are you doing?
Yeah, my hedge fund actually started out as kind of a healthcare value-based stock picking fund. And so yeah, I like going in all different directions. I have equities currently. My long equities positions right now, to confess, are extremely low. So they only make up, I'm only 2% long in certain equities right now. And then I'm very short. So things that I'm short, which are much larger positions in the equity space, I'm actually short financials. American Express just spiked on a pretty solid earnings report, but I think financials get crushed in this current environment.
Do you just buy the ETF for that, for the financials?
So that's one of the few ETFs I don't buy, only because Berkshire Hathaway is the number one holding, and that doesn't always act like a financial. That's more of kind of a safe haven stock. All the rest of the financials, so like I'm short
What is that, XLF?
American
The one we're talking
XLF.
about, right?
XLF
So,
is what I'm
so
talking
you're saying
about. Yep.
because Berkshire's in there, it skews it. Okay.
Yes, it skews it too much in the wrong direction. So that's why it gives it stability, which it shouldn't have. So American Express and Citibank are two of my current shorts in the financial sector. I'm shorting small cap growth stocks, an ETF called IWF. I'm shorting the Qs, so I'm shorting NASDAQ just outright. And that position has been doing pretty well.
Let me interject on that one. What do you think of the TQQQ? Like, why not go with that for the leverage? No, too dangerous?
I could. I do that sometimes, but I have enough shorts on right now, actually, that I don't do that. But I would. In fact, I actually tried buying puts on the TQQ several days ago.
Almost 20% the other day. It was crazy.
They do. Yeah, those things are crazy. And so if you want to get that, if I have high conviction that we've reached a local high, a lower high,
it's
usually.
A great way to capture a little bit additional.
It sure is.
Yeah.
So
but that's getting Amex, Citi, IWF, the Qs. What else?
What else am I short? I'll just run through my short list right now. So American Express. So Big Five is a retailer, kind of like a Dick's Sporting Goods sort of thing. Short that. I'm short. So miners. I'm short Bitfarms right now. I'm short Riot Blockchain. I'm short. There's an ETF just called Block, BLOK, that basically it's full of miners and crypto exchanges. I've been short that for quite a while. Coinbase, I love shorting Coinbase. No offense if you work for Coinbase, but I like shorting the other things that are sort of tied to Bitcoin but are not Bitcoin. They profit from Bitcoin. MSTR. The Bitcoin proxies, yes, I'm happy to short those. And then I'm just randomly short Brazil as well because they have pretty bad just general conditions as well. And then a short I just put on today, my newest short is Cheniere Energy. It's LNG is the ticker. Energy has really held up so far. Oil keeps going up, which is pretty surprising to me. It shouldn't be going up right now, but it is. So I'm looking at that as basically being the last domino to fall. Once energy peaks and starts descending, then we're really into this bear market for good.
Oil has gone, or USO, like the ETF, like that crashed a couple of years ago in the 2020 crash, and then they changed the maturities on the futures, which I got that wrong because I didn't understand at first.
Yeah, right.
But if I just held on to it because I got it at like $18, $20, it's grown tremendously since. I think it's up like 300%. It's incredible.
Exactly, and it's been really kind of, to me, almost shockingly resilient. I don't buy news stories. People are like, "Whoa, the supply and the war and possible and the Ukraine and blah blah blah." And I don't buy any of that stuff. That's just not how I think. I don't even care what the news is. I care about what is the macro setup and what is this showing. Okay. So to me, energy should be crashing right now, and it hasn't yet. But I do think so. Like LNG is a good example. I think natural gas and oil are both overpriced, both due for a fall. The LNG just made a lower high for the first time. That's a good technical indicator that it's starting to weaken. So it peaked at 114 per share like a week ago or so, and then it just got up to about 111 per share just today. And so I shorted it at 111. I think that's a lower high, and I think it goes down from here.
What is the current price of Bitcoin determined by? Like, why do we have a price at all at any price? Like, because one of the things I had Plan B on, right? We talked about earlier. And we talked about the stock to flow model, and like you said, then you had Corey on. It's so funny. But I had him on, and we talked about, and he even says, admittedly, he's like this plan. I don't put words in his mouth. You can watch the show and get the exact words, but kind of summarizing it, he basically said, we're just looking at one thing. There's a lot of variables, and this is just one thing. They don't look at demand, right? Which is, I mean, you could look at the supply and say it's a scarce asset, but without the demand, you have no idea if it's going to go up or down. So what causes the demand, and why do we have the price that we have, and how do we know? The biggest knock that I get from traditional investors is, how do I understand the value of Bitcoin? So explain how people can understand whether or not this is the current, if this price should be at $10,000 or if we're comfortable at the $40,000 range we're basically at. How do you know what the real price should be?
That's the $1 million question. So first of all, that's a hard one to answer, but at the same time, it is and it isn't. I'm a huge believer in Metcalfe's law, right? The power of the network and the intrinsic value of the Bitcoin network is directly proportional to the number of users squared. And I think when I'm talking about that big secular channel that I'm looking at, that's Metcalfe's law in action. The channel is. So the price action within that channel is driven by market cycles. Bull markets, bear markets, we're in a bear right now. That's going to drive the price down in the short term. But in the long run, that channel, I think, holds true. And because that's all about network adoption. What makes Bitcoin so interesting is it's not about just initial adoption, because there's phases of adoption. I think anybody who is a Bitcoiner understands this. I went from I used to make fun of Bitcoin to then I started to learn about it to then I owned a tiny bit of Bitcoin to then I owned a little more of Bitcoin, and now I own a lot of Bitcoin. And so everybody's going to go through that phase where they basically get off zero, but then they're like, well, if I have 1%, why wouldn't I have 5%? If I have 5, why shouldn't I have 25%? Why shouldn't I have 50%? There are people, we know, you and I know people who are they're not even 100%, they're like 110% long Bitcoin,
Crazy.
130%. Yeah, I think that's kind of crazy. But people got to do what people got to do, right? So how do you determine the actual value? I don't know. It's just this nebulous intrinsic value concept. Now, do I think Bitcoin has intrinsic value? Absolutely. A lot of value investors can't get their heads around this because they think of Bitcoin like it's a company. And I'm like, you got to quit thinking like it's a business. It doesn't have cash flows. It's literally is just better money. They'll say, well, what's it backed by? And I say, it doesn't need to be backed by anything. For the dollar had to be backed by gold. Does anybody ever ask, well, what's gold backed by? Of course not, right? Because it has intrinsic properties that give it value as a money. Bitcoin has those same properties, but even better, like 10x better or 100x better in many ways. To me, it's like the perfect secure asset and money, the better money for the digital age. That in and of itself gives it intrinsic value. What is the intrinsic value? Well, I think it's at least as much as gold because it's a better store of value than gold. I would say it should at least be as much as all the world's fiat currencies currently, which is a very large number. I think it also should be most of the world's store of value properties as well, because it's such a great store of value. So it should encompass some of that value as well. So I look at it like we're clearly going to be a greater than $100 trillion asset at some point, but it's going to take a while to get there. And it takes because people have to believe that in order to get it up to that price. And we have a long ways to go. So I think it's going to be a fun ride on the way up.
So you and I agree. We think that the Fed's monetary policy, their narrative, and the interest rates, the actual implementation of rising interest rates, are these macro trends that are going to affect the price of Bitcoin and all risk-on assets. What other than rising rates, Fed policy, what are some other macro headwinds that you see for Bitcoin?
Well, I think we're actually kind of in the middle of it all right now, honestly. So kind of just the stuff we've talked about. I think we're in the phase where it's ugly and it's going to get even more ugly in the coming months. So I keep telling people too, like not to be Debbie Downer, but we haven't even hit the rough patch yet. I think it actually gets kind of worse from here, not better. And I honestly don't think it's anything in particular. It's just more of the same. So more of it's more people are going to start realizing, oh shoot, the economy actually is decelerating. GDP growth is decelerating. Inflation actually is decelerating, and that affects different asset classes. And then the Fed is getting, they're getting hawkish at exactly the wrong time. That's not good. And then they're going to start focusing on scary news events too. What we had talked about earlier with Russia, Ukraine, COVID. Who knows what they're going to focus on? But something will continue to be the narrative that's going to drive the price down.
Why don't you walk me through potential scenarios, outcomes of how you think the Fed is going to play out over the next 6 months, right? So you do believe, I think you said earlier, that you're going to see a couple rate hikes.
Mm-hmm.
I think it was, who was the Fed? Let me tell you right now, Joe just sent me something just before we jumped on here, actually. It was Joe Carlos Arley. He texted me. He says, Fed Kashkari, I mean, he's kind of dovish, right? But he says a pause in rate hikes this spring is possible. That was the headline that came across. I sent this over to one of my hedge fund buddies, and he's notoriously on the left side of the aisle on Fed bankers. So if someone were to say this makes sense to him. And if someone's going to say this makes sense, it's obviously him that would say something like that, So it's not, in his opinion, it's a nothing burger that Kashkari says that. So what do you think? What do you think the Fed's going to end up doing, and how do you think this plays out?
Yeah, I don't actually think it is a nothing burger. I think if the most dovish guy on the Fed says we might pause in the spring, I think he sees what's coming as well. And if he says we're actually going to get, we're going to kind of stop our hawkish stance, and we're going to possibly have to pivot dovish, I think he's also looking ahead and be like, oh shoot, this is starting to get ugly again. So that's actually about almost, you said, what's my 6-month time frame? It's basically that. I think we're ugly now, so we're late January right now.
Got it.
February could do anything. March, it gets worse and worse. At some point, like I said, we either grind lower or we capitulate lower. I think Bitcoin will be one of the first asset classes to bottom, just like it was the first asset class along with U.S. small cap stocks to realize that there was trouble under the hood. It started to decline November 8th or 10th or whatever the date was. I think it's going to be like the canary in the coal mine. So I'm going to be watching it closely for when I think that things have bottomed and the economic cycles are sort of a delayed response to that. I think the large cap stocks are going to continue to decline after that. Then these risk on assets, they're going to anticipate that the Fed is going to do an about face at some point. It might be kind of around the same time frame. So again, these are all just conjecture, but probably March, they're going to try to raise rates. Soon thereafter, the markets will tell them this is not going to work out very well. And then I don't know the frame, like maybe still in March, maybe April, maybe as late as May, they're forced to pivot and get dovish. And then I think we start seeing the recovery. Most people at that time, by the way, won't believe it. They're going to be extremely bearish.
Yeah, it's usually how it turns when it turns.
This is how it works, right? Yeah. So there's going to be extreme fear, and I'm going to
everybody really believes it's still going to go up right now, which tells me it has to go down.
Exactly. And I'm going to be pounding the table then saying, you remember how I was bearish and you all hated me? Like, now get bullish. Like, now buy Bitcoin. Now buy risk on assets. This is the time to do it. And people will hate me for that. But, that's how life works.
But how low does the S&P go during this cycle? What do you think? What do you think happens?
That's a tough one for me. My standard answer is lower. How low does it go? I don't know. It's hard for me to imagine. I keep saying I throw out 20 to 30%. I can't hardly imagine that it gets down 30%. It needs to, by the way. I mean, it's very, very highly valued, richly valued right now. It would be very healthy to reset 30%. I don't know that the Fed lets it get that low. So I think when we're getting to like the 20%-ish range, when we're talking about a true bear market from an equity standpoint, that's a 20% decline. That's when they start thinking, oh shoot, we're taking this too far. We need to get dovish again.
Okay. I want to shift over to Vailshire. I want to explain why do you manage other? You made pretty good money as a doctor, I'm guessing, right? Mm-hmm. So why not just buy, hodl, sit and wait? American Hodl, good friend of mine. He sees all this stuff. He says he always says it's an activity bias that we all seem to have, right? People want to just feel like they're doing something. He's like, but if you just bought it and held it, you're not going to outperform me. He always says, right?
Right.
He's probably right. So why do you manage money? Why do you even trade around? Why trade over the short-term bearish sentiment on Bitcoin if you're long-term bullish? Why not just buy and hold it?
So great questions. Couple different questions. Why Vailshire? Since I got out of training in 2008, about a year later, like I said, I started this blog teaching people how to live well and invest wisely. And I've always, I'm just a teacher by nature, and I love to think about things, and I love to learn, and I love to teach people about these kind of things. So anybody, and that's why we all kind of hang out and talk to each other on Clubhouse and Twitter as well. We're sort of throwing out ideas that we have, and we like to learn from each other and pick up different. Yeah, we're all learning. It's fun to learn.
People listening, by the way, that should know, we don't know shit. We're learning.
Exactly. Yeah, we're all learning, right? And I make mistakes all the time, and I can teach a lot. I have wisdom because I've made like every mistake you can possibly make.
Yeah, come learn with us.
Yeah, I never planned on managing people's money. In fact, I kind of loathe people, to be honest, who are investment advisors and financial planners, because most of them to me are snake salespeople who just want your money under management.
You know that people have that view of you though, right? Like that's clearly what people are going to say. They're like, well, Jeff's just making money. He's a rent seeker, right? Like, I mean, so.
Exactly. I hear that all the time, but you know what? I just know who I am, right? I'm not a bad person. I truly like to help. It's the same as being a doctor. I didn't go into medicine to get money, right? There are a lot of ways to get wealthy. I'm not stupid. I could have done lots of other things. I just genuinely like to help people. I like to use my skills to help people live healthier lives. Sure. Same with finance. There are a lot of bad players. There are a lot of snake people, snake oil salesmen, all that kind of stuff. I wanted to be a good guy in kind of a bad guy world and just be one of those people. The people who are my clients, literally, they're fellow doctors, fellow nurses, administrators, the techs that I used to work for, ultrasound, like all of these people, they're like, I trusted you as the doctor and I trust you as my financial advisor. I just know you'll never do anything bad with my money, kind of is the view, right? So that's why I never thought I would do it, but I realized I can really help a ton of people who just have no interest in managing their own money. They don't want to think about what the Fed is doing. They don't know what a yield curve means. They don't care. They don't know what risk on, risk off assets, all that kind of stuff. I love this stuff, and they can sense that I love it. So they're like, could you manage my money? I'm like, sure, I'd love to help you out. That's kind of how I view it. I'm not trying to get rich off people. I'm just trying to help people get better investment returns. Your second question is, why do I trade around Bitcoin? Isn't it smarter to just sit and hold Bitcoin forever? For the most part, yes. But, and this is, I literally just said this today. I'm like, what did I tweet? Hold on, let me get to my Twitter here, because it was right before we got on. And I said, for what it's worth, there are alternatives to passively losing money. And everybody doesn't think about that, but I'm like, I'm telling you a bear market is coming. I'm putting my money where my mouth is. My Vailshire account is right now, we are heavily, heavily short right now. I'm not optimistic. We're doing quite well. I'm having a good, so the markets are what, S&P and NASDAQ are down 10 to 15% this month or so. Bitcoin's way down. Lots of other assets are down. We're up on the month. Why do I hedge? Why do I try to actively manage? Because I can see stuff coming, and why wouldn't I try to profit if I see this badness coming? If you see things, a situation where most likely assets are going to go down, risk on assets, why not short risk on assets and try to make money? Or for I have a lot of long only separately managed account clients that I can't short for. I'm like, well, why not just move to cash if I think that this S&P 500 is going to drop 20 to 30% and the NASDAQ might fall 30, 35% and Bitcoin might fall 70%, 75%. What's wrong with sitting in cash and kind of stepping to the sidelines? And I told people, the last time I was this cautious, I'm usually an optimist and I'm usually very bullish. The last time I did this, where we sat mostly in cash with some long dated US treasuries and gold, was the end of February 2020. So I saw the same kind of red flag setting up. I was concerned about what was going on from a macro perspective. I didn't know that COVID was going to hit and do what it did, but it did. And we were sitting on the sidelines for the most part, watching the markets just go down the toilet. And I felt pretty good about that. I feel like I'm actually helping my clients not panic when to see their accounts go down 30, 40, 50% like they did.
By the way, I would say, Jeff, that's one of the things I always say. I talk about technical analysis a little bit when I was on Clubhouse, and a little bit of I'm good friends with Will Clemente, and I think what he does and what Willie Woo does, and all those guys, right? Essentially, I think it's really helpful for new people into Bitcoin, more so than if you've been in through a cycle, right? Regardless if you believe in cycles or not, we've had them. So it doesn't make a difference. Moving forward, we might not, to your point, right? But we've certainly had the history of this, right? And so if you've gotten through those cycles, you have a margin of safety, as Benjamin Graham would say, right? So you're not as concerned. So a lot of these people come from a perspective of arrogance, in my opinion. It's like, oh, who cares? And it's like, did you forget what it was like the first time, guys? Come on. So if you could see charts, it gives you comfort in knowing, oh, this is setting up for a capitulation to go one way or the other. And you can see the RSI and the indicators. It just gives people comfort in understanding price action. And it's not like this thing's going to zero. It's not like it's over. The whole thing's going away. It's like, no, it's not. And you'll actually see it when you watch these things move within the channels and stuff. It kind of gives you some comfort and understanding the way, because it's self-fulfilling prophecy, right? A lot of people are looking at these charts and they're trading based on the movements of the technical indicators,
Yeah, exactly. And again, getting back to an earlier point, it's all about probabilities, right? So when you're looking at things and we see these technical setups, and I say, well, shoot, all the momentum indicators right now are suggesting that things are overbought right now. It's probably a pretty good bet, pretty safe bet that the next move is going to be lower.
Yeah.
And so it's not always right. It doesn't mean it has to do that, but it's probabilities.
To your point, there's just some other event that may happen that changes that, but
exactly.
That doesn't mean, like, that's when my friends will be like, they say, well, see, it's a bunch of bullshit. And I'm like, no, because most of the time the other thing doesn't happen. Most of the time it does exactly what it's supposed to do. And sometimes it doesn't. It doesn't mean you should own no Bitcoin and only trade. And it doesn't even mean you should trade. It should just, at least at a minimum for people, give them understanding and comfort. And by the way, Hodl says all this stuff. And then when I talk to him, he reads all these damn TA charts as well. He's smart. He understands all that shit, right?
Yeah, he's smart.
But he doesn't want people to, I think it's just cautionary. You don't want people to start looking at these things and then they just wreck themselves, because you could certainly do that, right?
Yeah, for sure. In fact, most traders do, by the way. That's a point I like to bring up. I talk about trading all the time, and what I want to caveat is nobody should trade unless you absolutely know what you're doing. I think a report came out from Fidelity that says, and this was years ago, I remember it, of their trading accounts, I think within 1 year, something like 90%, a little greater than 90% of those accounts actually close because the balances go down to zero or near zero. So basically everybody loses money because you don't, trading, you're taking so many risks that you don't even know about. You can be right in the direction, but just slightly off in the timing and you lose money. You can lose money on fees. You can lose money. There's so many different ways to lose money. And if you don't have a great, cash preservation system where you limit your losses and you have to let your winners run a little more than you limit your losses, you're never going to survive. And I only know a very small handful of people who have survived as traders for long term. Two guys I talk to a lot on Twitter, John Wick, he's the trading alpha guy. I like him a lot. He's a teacher, educator in the space, and he has a great setup for trading. And then Peter Brandt is an old trader guy. He's actually a personal friend of mine, and so we'll talk a lot about different setups that I see, and he teaches me a lot of stuff. But besides those two guys, I really don't know very many other people who have actually made a career out of trading. It's generally really stupid to trade. And I only do it when I see short-term setups that to me are very high percentage chances. Otherwise, especially with Bitcoin, it's way smarter just to simply buy and hold Bitcoin.
What is your cash position as a percentage? Actually, I want to go through allocation. If you could, Bitcoin personally, forget about the fund. Personally, what's a personal allocation that you have to Bitcoin? What is your personal dry powder cash position? And then just bucket, like, don't tell me all the equity, but like this percentage equities, this percentage Bitcoin, this percentage in cash.
Sure. So personally, I almost never hold cash. I literally only own enough cash to pay the bills for the next few months. My Bitcoin position has grown sizably, obviously, over the last couple of years. Yeah. So
what did you start at? How about that? That's probably the best way to put it. What did you start?
Well, started at zero and made fun of it, and then I actually got into the crypto space back in 2016 because of the Sharpe ratio. As a financial guy, I'm like, whoa, the Sharpe ratio is incredible. The risk-adjusted returns are insane. Yes, they're volatile, but you can make crazy amounts of money. I didn't understand. I just want to make it super clear. I did not understand Bitcoin. The fork wars were going on at the time. I didn't know the difference. I had no idea what would win, if it would be Bitcoin or Litecoin or Bitcoin Cash or any of these other things, or Ethereum. I didn't know the difference between them. I owned a basket of them. And then I got sucked in, all the people I see doing this now, and I just always try to counsel them, please, please, please don't be like me. They see these other altcoins going up, the Doge coins and the Shiba Inus and all that. And we had the exact same coins back in 2017 as well that were doing the same kind of thing, just going up 100x, 1000x. And so I didn't know what I had in Bitcoin. I sold all of that to buy this crap, all these altcoins. They went like this, and I thought I was brilliant, and then they crashed down, right? So 2018 tax day for my 2017 taxes, I crushed it in 2017. So I had this huge tax bill, but by then the market had crashed and we were already in crypto winter. So I was like, my net worth just went way down, and I had this gigantic tax bill, and I was like, this sucks. Like, what did I do? I'm so stupid. And then it was Preston Pish who went down the rabbit hole, and he did that on the investors broadcast, the We Study Billionaires. I kind of went along his journey with him because I used to be a value investor. And then he turned me on to Safe's book, Safety and a Moose, the Bitcoin standard. And that's what basically threw me down the rabbit hole. And then I never recovered. I've just did 10,000 hours of reading after that, and I am what I am now.
So you started with zero, you screwed around, and then when you finally went into Bitcoin, what percentage allocation did you start with at the point that you had conviction? And what would you move in then?
Yeah, so conviction started in early 2019, and so what I did is I went to 1%. I did the thing I just talked about, like with my clients too. I started at 1%, and I thought, if I really think Bitcoin's going to do what it's going to do, why would I only have 1% into it? So then I went up to 5%, and I'm like, 5%, this is nothing. Like, I think this is going to literally change the world because it's simply better money, and it can go up, whatever 100% per year. So then I like went to 20, and I think I kind of I went to maybe like 25% ish or so
That's purchasing of 25, and then it grows from
purchasing,
there.
and then just since then have been on just like a DCA kind of schedule.
Sure.
And then it's grown also. So in there, so net worth goes up and down. That's Bitcoin. That's grown to be kind
When
of
it was
over
at 69,000, what was it as a percentage?
Oh, geez. I don't know. I don't pay that much attention. What's funny is I put all my focus into
You'd have to
Vailshire
do the
stuff
math. Yeah.
and trading, and I don't really pay attention to my personal stuff. I just
You
set
could
it
just
on
sit on
DCA.
it. Yeah.
I set it and forget it, and I don't care because I don't care if
Sure.
it goes down 80%.
Yeah.
I just keep buying it,
Yep. Yeah.
I still like stocks. I love investing
Okay.
in companies that I think are great companies that are doing good things. I have some private investments too that I literally don't pay attention to. Yeah, private equity. And then real estate stuff. I'm not good at real estate and don't think much about it. I'm more
Do
an
you own
equities guy.
properties, or do you just do like REITs and stuff? What do you?
Just mostly REITs, things I
Yeah.
can buy in a brokerage firm kind of thing.
It's liquid. Yeah.
Yep.
If the thesis changes, it's easy to get out. Yeah.
Right. Yeah. So that's kind of my story. Pretty simple. I'm a simple guy.
Another question for you. Have you ever experimented rather in mining? Did you ever buy like an ant miner or something like that and just mess around with it? No.
I have not. No.
Do you run a node?
I don't. I
Okay.
want to, but I don't. What I'm waiting for, and this just shows that I'm good at some sides. I'm good on the financial side of Bitcoin and macro,
Sure.
but I don't get the
Yeah.
technical side very well. I want to wait for it to be really easy to run a node and a Lightning channel, and I don't think it is yet because the people I talk to who are technical people still kind of struggle with it. Once that's easy, I think that'll be my entry point to do it.
I mean, Jason Williams was trolling like P and all those guys last year all the time on Clubhouse. Yeah. He goes, yeah, I've had this node running for years. I think I made like $3. He goes, this is great, guys. Let me tell you.
Right. It's definitely like volunteer work, right? You don't get paid for it really. You don't do it to make money.
Which is not sustainable. That's got to get fixed. Yeah.
Exactly. So we'll see.
Okay. My orange pilling. So you have, like you said, in your hedge fund, you have a bunch of former industry peers that came to you, which obviously makes a lot of sense. What is your success rate on oranging? Not that you know the percentages, but like how well do you do an orange pilling your friends? Because I think most people fail at this, at least for the first few times they try to get somebody to understand it. And what is your tactic to educate? Because you said you do this your whole thing is about educating and teaching. So how do you try to educate people about Bitcoin?
I think from what I gather, my success rate is actually pretty high compared to most people. And part of it is because I'm really passionate about it. And I think people understand who know me, they get that I'm genuine, that I'm not trying to get something from them, and that I'm truly passionate about this kind of thing. So most of the people I really kind of lay into, like, you got to do this, they come around. It's been good success. People, it depends. I try to get into other people's shoes when I'm talking to them. It kind of depends what angle they're coming from. One of the things that works best for me when I first just kind of start introducing people is I'll just say, it's just simply better money. Bitcoin is. And they'll be like, and I'll let that sink in for a little bit. They're like, well, why is it better money? And I'm like, well, let's talk about things. I said, do you ever notice how in life, year after year, things just get more and more expensive? Like, your healthcare costs go up every year. Groceries are more expensive. It costs more to buy a Big Mac at McDonald's. Like, everything you're doing is more. That kind of sucks, doesn't it? I said, do you know why it does that? I said, that's called inflation. We have inflation because we have a central bank that's literally just printing money. They can print money literally infinitely if they want to, as much as money as they want. But if you think about that, it's just math, right? Because if you have an infinite amount of things being printed, the value of each individual unit is driven to zero over time. So they're just making our money cheaper and cheaper and cheaper. Basically, they're making our purchasing power worth less and less and less every year. That's called inflation. It's a bad thing. The cool thing about Bitcoin is exactly the opposite. There aren't a bunch of old dudes sitting around in a room controlling the supply of Bitcoin. There only ever can be 21 million Bitcoin because it has this fixed supply. It's the exact opposite math equation. There's only ever this many, so the value of each individual unit over time actually approaches infinity. It's not going to get to infinity, right? It's just a concept, but it's going to get higher and higher and higher over time, and life just gets cheaper the longer you own Bitcoin. So that's kind of how I talk to him. Like, it's just a better money, and life gets cheaper the longer you hold it. So I recommend everybody hold some Bitcoin.
And do you recommend they read anything? I always point people to Vijay Boyapati's Medium article and his book, and
Yeah,
there's like a sequence. So what? Yeah,
got
there
it
you
right here.
go.
Yep.
There you go.
It's a great book. That and Safe's book is good. It kind of just depends on where they're coming from. I try to,
Yes,
keep it simple for people. Some people, even Safe's book is
VJ's the
hard for
easier one.
VJ's easier, but some people actually think his is a little too technical, which I think is interesting.
Really?
Yeah, so go figure. But I think those are the primary two books that I introduce people to, and then I invite them to come on to Twitter Spaces and to Clubhouse. Cafe Bitcoin is just great for beginners, and you can ask questions.
What are your top three sources? Whether it's a podcast, person to listen to, blogs, and/or Twitter Spaces, Clubhouse, books. What do you tell people if you had three things?
Geez, top three. I have like a top 20, but
most people aren't doing that kind of research right away.
exactly. So the two books we mentioned are probably my two most recommended one: The Bullish Face for Bitcoin, and then Safe's book. My wife just read the Fiat Standard, by the way. She said it was really good. I haven't read it yet.
Neither.
Preston Pish, because he's becoming a friend of mine, and he
Yeah.
he brought me down the road. I truly believe he's a genuine guy. You're a genuine guy with fantastic educational resources, so I point people to your
Thanks.
podcast as well. It's fantastic, and you do, like we talked about earlier before this started. You do a great job on the production side of it. It's just kind of fun to watch your shows because it's visually pleasing. So if people are listening to this on iTunes, I recommend that you check Jay's podcast out on YouTube. Yep. BTC Sessions does a lot of like kind of hands-on
Okay.
things. That's fantastic. And then again, Cafe Bitcoin, you can do it on either Clubhouse or on Twitter
Great for
Spaces, and they're both
newbies.
excellent.
Yeah.
And then also for people where they should start with Bitcoin, I really love Strike. I love Jack Mallers and his heart and what he's doing at Strike, and I really love the team at Swan. For newbies, I point all of them to Swan because Swan has just such an educational focus. I know almost all of the people that work there, and I like all of them, and I believe they're genuinely hardcore Bitcoiners who really love to teach, who will not take advantage of you, and they'll point you to the best resources possible. So I just really like the Swan team. Corey's built a great company there. I'd like to support him any chance I get.
I'm actually an investor in that company. Yeah, I think he's doing a great job. Yeah, it's
Yep.
content driven, educational driven.
Yep.
It's great. Okay, last question I ask. I saw in some of the comments throughout the last couple of months, you block some people. Some people block people on Twitter. Other people don't. Why do you block people? Why do you block the Bitcoin Mac? Why not just ignore it? Like, why do you block them?
This is going to surprise people, but I'm actually really thin-skinned. Things really bother me. I actually, when people are
Now
being
they're really
dicks to
coming
me,
for you.
and they're coming after me hard right now. And when people are dogmatic and disrespectful and just mean, downright mean, I was like, I don't have time for this. Like, I don't want to deal with that. It literally, like, I think about it. I'll go to bed. I'm like, oh, this dude, like, he's like threatening me, and he tells me he wants me to get wrecked, and he blah blah blah, and he thinks I'm being disingenuous and blah blah. I just think I don't want to deal with that. And so, Mark Yusko, actually, of all people, he taught me that a couple years ago. He's like, block early and often, and that's been my motto since then. Like, don't let it get to you. If somebody's getting to me, I usually give people 3 strikes. I'll even tell them, I'm like, you're on strike 2 right now, just so you know. One more, you're out. And then I just block them, and then I don't think about them anymore.
I think I blocked a couple people months ago, and then I unblocked them. Actually, I was just like, "Who gives a shit?" Like, I didn't even care. But I blocked it because, to your point, it was always in the comments, like, or the replies rather on your tweets, and it was just like it was all about like chill frog stupid shit. And I was like, "This is so stupid." Like, it was just annoying to see. Like,
Yes.
you're deterring from the conversation, but who cares, right? Like, I also ultimately was just like, I don't even care. Fuck it, I just don't look at it.
Yeah, and I do, and so I do, and I don't, right? So it just depends when I here. I think I don't know what it is. It's just how I'm wired. I really want to help people, and it's kind of like if you're being a doctor and you're trying to save somebody's life, and they start calling you stupid and slap you in the face or something like, I'm trying to help you, like, what's your problem? And so that's kind of how I feel with Twitter. Like, I'm literally just trying to help you. I'm trying to tell people what I see, and so they can be mentally prepared for this current bear market, those kind of things. If you don't like it, just unfollow me. You don't have to like call me out and call me, and say like I'm being duplicitous and I'm trying to take advantage of people. When people start going down that road, I'm just like, you're out. I don't even want
They
you
don't
to
know
see
your
what
motives. Right? It's just purely assumption.
they don't know my heart, so they don't get to see my tweets.
Yeah, totally. I forgot to ask you earlier before we hop. In your fund, how large is your fund? What's your AUM?
So it's I manage about 10 million in my fund, and then overall in Vailshire it's about 40 million assets under management. So,
and is that just all individuals, high nets?
Yeah, that's it. So started from zero, from scratch. I was the first investor in my fund in 2014, 120,000 of my own money, and I literally flipped the open sign on, and I just said, "All right, let's do this." And I didn't literally. I had no client until August of 2014, so I went 8 months just by myself. I'm like, just had to start somewhere.
Interesting. Did you get licenses? Like, are you like,
Yep.
you
Series
got Series
65 and 65, and then and I'm incorporated in Delaware, and I report to the state, Colorado Department of Revenue, that kind of stuff. So
Okay. Yeah. And what's your performance look like annually on the fund?
let me get to it. It's going to be better after this month too.
And that's not public, right? Like when you're a private fund like this, that's just those numbers are never.
I don't have to publish it, but I actually do. So on
of course, it's good marketing if you're good at it.
Yeah, Vailshire.com. So I have a hedge fund page. So my compounded annual return over 3 years was 41.59% compared to the S&P, which was 26, and then 5-year compounded is 25%.
That's really good.
I mean, it's not as good as just like a crypto fund, obviously, but it's a lot better than just investing in stocks and bonds. So, sorry, that's the audience I'm targeting for clients. Is for people who are just hardcore Bitcoiners, you don't need me. You're set. For people who are no coiners who hate Bitcoin, you're also not for me, because I'm going to invest in Bitcoin and Bitcoin related companies. For everybody else in between, they're potential Vailshire clients. So if you want to, invest in stocks and companies and maybe bonds, possibly, or commodities or currencies or whatever kind of things, or you want to be in Bitcoin and Bitcoin infrastructure plays, that's where Vailshire comes in. So
is that pre-fees or post-fees? Those numbers, is that before
that's net of fees? Yeah, so after fees.
That's really good. And you're 2 and 20, or what's your fee?
No, 0 and 20. So that's another thing I like. So I don't charge any management fee, and I only make money if my clients make money. So it's a high water mark annually. I literally make 0 money if I don't make you money.
Now, what about the unrealized at the end of the year? Are you constantly like selling and getting gains, realized gains throughout the year? You must have unrealized stuff that they hold as well, or do you constantly just trading?
So the fund administrator works through all that stuff to find what the actual net asset value is for each individual investor within the fund, the limited partners. They do all that kind of stuff. So it doesn't matter if it's...
Who do you use for that? Just third party?
Yeah, third party. They're called HC Global.
Okay. A lot of funds are using them, I guess. That's like a thing in the industry. Okay. I've never run a hedge fund, so I have no idea. That's interesting.
Yeah, I outsource all that. So legal, fund administration, that kind of stuff. They do that. Otherwise, I wear every other hat in the company.
So all you're doing is you just focus on the trading. You don't have to focus on anything else.
Yeah, and client, I hold hands. So when the market's going down,
investor relations. Yeah.
All my clients are texting me. They're calling.
So you're not like Michael Burry in the movie The Big Short, where he has his feet on the desk. He's just playing with it. I am not. It's like, it's gonna go up, I swear, and his goes down. It's like,
right.
Everybody's calling you. You're looking at the phone. You're like, damn it, this guy's calling again. I'm not going to pick up that.
I'm a little more personable than Michael Burry, even though he's he's a physician turned hedge fund manager. I try to hold my clients' hands a little bit if they need it.
I mean, that's kind of what it is, right? Part of when you're managing other people's money is managing their emotions, right?
For sure. And you know what it is? I have a lot of clients who come to me and they tell me about their just sordid history of investment returns, just terrible. They sell at the wrong time. They buy at the wrong time. Yeah. Like most people, they have FOMO at exactly the wrong time and FUD at the wrong time. And I'm like, I will help you do that, but you have to let me help you. And so the last time I had a thing where I had 2 clients that I couldn't help. It was in May, June of 2021, China banned miners, Bitcoin plunged. I hadn't expected that because the macro setup was actually still decent at that time. So I certainly wasn't waiting for a plunge to happen. So we just got hit hard. I had 2 clients that they're like, liquidate everything, sell everything, I'm out. And I'm like, no, like I said, I'm not saying you can't do it because it's your money, but I'm telling you, this is the worst possible time to be doing this. You never want to sell when there's blood in the streets.
What was the drawdown when that happened?
I don't remember offhand. It wasn't that bad because I wasn't just pure Bitcoin. I have stocks and other things as well. I don't even know. I'd have to go back and look at my records.
And one final question on kind of the fun thing. So when you get a new client that comes in, how do you get them off of having cash? How do you get them fully invested in the market? Because it's like the biggest fear for most people is that they sit in a lot of cash, they're racking themselves because of inflation. How do you get them to get more invested and get less cash on the balance sheet?
It depends on their personality. So first of all, I look for people and I tell them straight up. I actually, people think they're hiring me. I'm definitely winnowing my clients too. Like I look at this like almost like a marriage because I plan on managing your money for, years and decades. So I say right off the bat, I'll talk about, I'm a big fan of Bitcoin. I'm not scared of volatility. I say volatility only equals risk in academia. when you're a real investor, like you have to embrace volatility and you learn how to take advantage of it. So, and then I'll talk about things like this. Like we'll talk about, February of 2020, I saw lots of red flags. We hedged strongly. We moved to all cash. We were shorting things. And then when the crash happened in March of 2020, not that I can always predict these things, but sometimes I can see
That was
bad
an
stuff
obvious
coming.
one. Mhm.
Right, exactly. And so I think we're at another one of those points right now. And so this is not the time to be fully invested into risk on assets. So again, and that's what I'll tell people who are conservative, like I'm going to protect you. I'm not just trying to shoot the moon, shoot the lights out and make as much money as possible. There's also times to be defensive and to protect your capital. And that's the kind of period we're in right now.
So did you move positions off and go into some cash waiting for a bottom here? Or what
Oh,
did you, what
yeah.
did you do in the fund? Yeah. How much cash did you move into?
Well, and so in my long only accounts, let me just get to them. I have different levels of people, obviously, like with different trading goals, conservative, moderate, aggressive, that kind of things.
Yeah.
So in my conservative long only accounts, we're sitting in 25% long dated US Treasuries right now.
Okay.
And then we only have 3%.
What duration?
The TLT. So that's like kind of
TLT.
the,
Yep.
that one. Okay. And then we actually we're long VIX.
Okay.
We're also shorting the Qs and shorting the S&P 500, like 5% positions. 3% foreign stocks. We literally have no U.S. stock exposure, and we're 57% cash right now.
57% cash. Yeah, you're really bearish. Wow.
Yeah, super bearish.
That can change in a heartbeat, though. Yeah.
I change when the macro changes, and I tell people the last time I was this bearish was late February 2020. You can decide if you think that was a good decision. I think it was. We basically had very minimal drawdown. I think this is what's happening right now. If I don't see, who is it? Jim Rogers, I think, made the insight. He said, when I see a dollar sitting on the ground, I walk over and I pick it up. And so it's like, if you see the opportunity, you just go do it.
I'm looking at the VIX too. Jeff, check this out. I'm looking at the VIX, right? So February 2020, okay? February 3rd, it was 15, 10th, 13, and then it starts spiking, 17, 40 by February 24th, right? That's when you started probably saying like, there's a problem here, right?
Yes.
And then it just like peaked out at like 60 something. In March 16th, and then it just like been declining ever since. So you believe we're setting up to go significant. I mean, the other day we were up at like 30 something. I think we were on Spaces the other day. We were talking about this. When I saw that, I was like, whoa, where are we going? Right? Because that was a quick rise, but then it kind of sharply declined. And Joe Carlisarli thinks that we're going to see a spike up here for the next week or two, and then he thinks we're going to see on the prices, I should say, of SPY. He thinks we're going to start to see a decline after we go to. He thinks we're going to go back to an all-time high actually on SPY. Do you believe that we could do that? By the way,
I don't disbelieve it. I don't think that it's impossible that we go back to all-time highs, but I certainly wouldn't bet on that right now.
For your fund being at 57% cash, that would be a problem, right? You have to capitulate.
Yeah, it's possible to have relief rallies within. In fact, you see the biggest bullish moves in bear markets. That's what most people don't get. We might see a pop in the S&P of 7% higher one day. But you know what I would do? I would short the heck out of it at that point too. So I short
you
any
watch that
rips or sell
RSI,
any
look
rips.
at the momentum, right? Yeah.
Yep.
Wow. Okay. Yeah. So where do you see VIX going? Do you think the VIX is going to pop up into the 30s or 40s, or do you think what do you think is going to happen? Yeah,
I do. So I definitely do. I think that so I like to when I say I'm long volatility, I own something called VXX. It's a short-term futures ETN that's based on the VIX. It's terrible to own over the long run, but it's fantastic to hold when people get scared. And so you look back to, again, we're talking about March of 2020. And on February 13th, it looks like it was that fund, the VXX was $54. And then it spiked at the peak on March 19th to $248. So it can go up like 4x in just over, sometimes it'll double literally in one day if everybody's panicking. So periods like this, I think it's the best hedge to have in your portfolio. I actually like it. Like if I could only do one thing right now, it would be to be long the VIX right now.
Because it's going to pop. It's going to pop, and then the VXX is going to go up tremendously. Look at this. I mean, I'm looking at the price. It was 54, going all the way to like 242 in nanoseconds. I mean, literally, man, that's incredible. It did that in like a month.
So if you are nervous about a big, capitulation type event, or things getting like the rug's going to get pulled out from under equities, I don't think there's any better way to hedge a portfolio than that. This is not individual investment advice, but that's what I do. my portfolios.
Well, thank you for the insight on what you're doing with your portfolio. Most people don't talk about these things, so it's really interesting to hear what you're doing. Your performance is really amazing, by the way.
Thanks.
So yeah, no, listen, enjoyed it. Really enjoyed the relationship and the commentary and the insights and your perspective. And I really wanted to have you on the show, particularly in this bearish sentiment right now, because you're out there very publicly on Twitter, catching a lot of heat right now. But you know what? You've been right so far. So it made sense to bring you on to understand your thinking. So thanks for coming on.
Jay, thanks so much for having me. I had a ton of fun. It's a great conversation. So I really appreciate the invite.
Where can everybody find you?
So you can go to my website, Vailshire.com, and to get in any information, if you want to reach out to me by email, info@Vailshire.com. And then I'm always on Twitter. I'm on Twitter too much, actually. But so if you want to reach out to me, my handle is @Vailshire Cap. Come find me. I'm on Twitter Spaces a lot. I occasionally pop over to Clubhouse as well. But always happy to talk to anybody about macro investing, even health related stuff. So whatever you want to talk about, I'm happy to do it.
Everybody, Dr. Jeff Ross. Thanks, Jeff.
Thanks, Jay.